Welcome traders to this video where we're going to be talking about the 5 top tips for time frame trading. So before we get into our 5 top tips when using time frame trading, we do want to recommend obviously traders use professional charting software such as this, which is TradingView.com. And TradingView.com, you can easily come to here, you can open up a browser, a free account, and it gives you a lot more maneuverability and basically analyze the charts away from MetaTrader 4. So in TradingView.com, you're going to have the timeframes on the top left. If you hit the drop down key, we actually star just the main timeframes that we want to be using. Now we'll cover this the amount of time frames they should be using later in this video, but for now I star the monthly, weekly, daily, 8-hour, 4-hour, and 1 hour. These are the main time frames I use, so then I can easily access them as I'm going through the analysis, and they're just there in the top left. The first tip within this video is going to be start on the higher time frames. Now you want to be starting your analysis on the higher time frames to get the more to basically locate the larger trends and the trade direction within the trend analysis. So you want to be really starting on the monthly and weekly in order to locate where these trends are occurring. You can pick up certain trade key levels and targets, and as you go through your analysis and you study the pair, as you go through, you're going to be going down the time frames, weekly, daily, and then into the intraday, which is below the daily. And then hopefully when you arrive at the lower time frames, you're going to be able to identify and find a trade setup which aligns with the higher time frame targets. So it's higher time frame for looking at the trends, the trade direction and targets. The lower time frames are for analyzing on a micro level and also trying to find those trade setups. That brings me on to point number 2. And point number 2 really is, if you need clarity, then step back. For example, you might be on an intraday time frame, such as the 4-hour, and you might get a little bit clogged up or messy. It might become messy within the tools that you're actually applying to the chart. Maybe it becomes a little bit too hectic and you're struggling to actually find the overall trade direction, or something might be holding you back with a certain key level. Then basically, if you are finding yourself in this mindset or mind frame, then you want to step back a time frame. You want to step back to the daily. You want to step back to the weekly. And that's really to get more clarity within the chart so that you can understand more of a clear direction. On the flip side to this, for point number 3, is if you need more detail. So basically, if you find enough detail or you have enough information from a certain time frame, then basically step down. If you have, for example, on the weekly placed on 4 key levels and you understand the trade direction, where the higher highs are, where the lower lows are, where maybe a certain Fibonacci retracement level is happening within a trend, then if you feel like you've already got enough sufficient information and the chart is getting a little bit too messy, then maybe perhaps step down a time frame and try and understand more of a short-term basis. And that's when you want to be stepping down, when you've placed on all of your tools allocated for that time frame, and then you can step down and get a little bit more detail into where the certain move might be happening. For example, on a daily, you might be looking at certain resistance. The price might have come into a level where we're looking at certain resistance, for example, around these levels here. So you might want to step down and look for a little bit clarity of what's actually happened around the levels of the resistance. And then likewise, if you need more clarity, you can step back and understand what's happened around the daily time frame around that level of resistance. So it's quite simple tips, but it's a lot of traders overlook this when they're actually trading, and they sort of rush onto the lower time frames in order to quickly find those trading setups. So that brings me on to point number 4, and that's minimize the amount of time frames that you're actually looking at. So ideally, you want to be looking at a small selection of time frames. A lot of traders, when they come into the market, they look at too many and they try and master too many time frames. For example, they might be looking at the 1 minute, 5 minute, 15 minute, 30-minute, hourly, and then all of the timeframes above that. Whereas you really want to be quite consistent in the way that you just simplify your whole trading style when it comes to analyzing. So just having the monthly, weekly, daily as the higher timeframes, and then intraday, maybe even just perhaps the 4 hour and the 1 hour would be sufficient in actually absorbing a lot of the knowledge and getting a lot of experience under your belt when it comes to analyzing the charts. And the fifth and final point is for new traders out there, don't go below the hourly. Now, there are many strategies that do that can make a lot of profit under the 1 hour, and many traders have been able to, effectively analyze the lower time frames. But when it comes to long-term longevity and consistency within the market, and actually trying to make a profit long-term, you really don't want to be going below the hourly. Now, if we do hop onto the hourly, already the market can become very messy when it comes to key levels. It can be breaking many support resistance zones, and it just doesn't give a lot of clarity in overall trade direction and consistency. Because it is a lower time frame, it's going to be prone to more manipulation when it comes to actually finding certain trade setups. So ideally, you don't want to be going below the hourly. The moment you go below the hourly, it even becomes more hectic, and it can actually even affect your trading psychology even more when it comes to actually finding certain trade setups, and it can throw you off when it comes to the lower time frame candlesticks painting certain things which might affect your trading judgment. So you want to stick above the hourly, use mainly the higher time frames, and keep it simple when it comes to time frames, and have a select rule, have a select amount of key levels that you can allocate per time frame. Have different things that you're looking for on different time frames. For example, maybe keep the Fibonacci or the sort of midterm trend direction on the daily, and then you can sort of dissect that on the 4 hour in order to actually find where maybe certain trade setups can occur. So that's it for this video. Obviously, if you have enjoyed, then please drop a like, and also share the video if you feel it's very helpful. And yeah, stay tuned for more videos to come.